Hello, thank you everyone for attending our session today, Adopting a Risk-Based Approach to AML and Financial Crime Management. I am honored today to be your moderator. My name is Jessica Bartlett. I am a Director of Financial Crime Legal covering the APAC region for Barclays. And I am honored to be joined by our panel, which I will introduce now. We have Maggie Chu, Head of Sanctions, Financial Crime Compliance for Greater China and North Asia at Standard Chartered Bank. Francis Choi, Head of AML for Ping An One Connect Bank, and Marco Trebrinka, FCC Head of Business Advisory and Governance at Mox Bank. We're very excited about our panel discussion today. We very much welcome your questions from the audience. I will be fed those throughout the session, and I will try to incorporate those into our discussion so it's as interactive as possible on Zoom. But I will also try to leave some time at the end so that we really get audience questions addressed as much as possible. So I'll kick us off on our discussion, but broadly speaking, we're going to start talking about some trends in risk, how we address some of the challenges using a risk-based approach, what those challenges are, how we might flex the approach, and then end up the conversation a bit with where technology development is and how it's aiding in this process. So with that, I will move to our first topic, which is new trends in risk in 2020, with a focus, as you might expect, on COVID, but not limited to COVID. And I'm going to ask each member of the panel the same question. What are, in your view, the 2020 trends? And in particular, what trends have we seen during COVID-19? With responses to lockdown, different patterns in online activity, and banking and government relief programs being a few of the things that we have seen this year. And to kick us off, I'm going to start with Marco. Can you give me your view on this question?
Sure, Jessica, thank you. We've heard from the different panels yesterday and today about the impacts of the pandemic on society. The year has brought many changes on people's work, the way people interact, people's finances, their health. And what you see is that life is more online and that the bad actors, the fraudsters, are changing their approaches as well. They are adaptable, more borderless, and quite fast moving. On your question, what they are up to these days, you'll see that it's not always new techniques that they use. They can simply be taking advantage of the current situation. Take, for example, things like social engineering, phishing. Those continue to be ongoing concerns, but especially when people's lives are online. The same goes for things like impersonation of officials and CEO frauds. Also those, they're ongoing concerns, but even more so with remote working. And that large-scale remote working can also bring increased risk to organizations with, for example, the cybersecurity area. What you see is that the fraudsters are capitalizing on that uncertainty, the fear and a lack of digital expertise for some segments of the population. There are also additional opportunities for the criminals to launder illicit funds through, for example, the increased use of unregulated players. Now, with all that, there can be challenges for banks, to recognize what is the new normal, now that customers are changing their behaviors, but also, for example, in conducting due diligence while you have social distancing, travel restrictions. So just like the fraudsters, also our controls should be evolving. Both for those threats that are known and the new threat scenarios. There are also some positives. The rapid advancement of technology that we see, digital banking that's supporting the new normality, And overall, the pandemic is accelerating those processes. And in some cases, banks even, I think, needed to invest and implement digital solutions a bit faster than anticipated. Thanks, Jessica.
Thank you, Marco. I'm now going to shift over to Maggie. I think Marco identified a number of the trends that we've seen. Do you want to reflect on that or add to it?
Yeah, I think majority of them he already mentioned because the lockdown as a corona pandemic, we're seeing increasing volume of forging activity. At the beginning, I recall there's a huge sort of increase into the forger activity related to protective gear, masks at the beginning, very beginning, because that was a hot commodity. It's very hard to find. So there are a lot of things going on online. The proceeds that go to the banks. So we see pick up from the market. And also there are a lot of activities related to government funds. You know, as the government kicking a lot of relief funds or unemployment benefit, and the government agency want those funds to get to the people, a recipient quickly. So that create a lot of sort of opportunity for criminal, right, to launch some sort of thing going on. And you know, a lot of them are in US, obviously, but as other countries around the world have similar unemployment benefit, or Hong Kong have PPP loans, and those all create sort of different patterns which can be picked up through the system. But a lot of the techniques are actually not new, as Marco mentioned, right? It's just the underlying purpose or the thing are slightly different. And another thing, I think the FinCEN recently issued a report talk about the ransom by cryptocurrency. So that's something I think Marco alluded to early. It's the unregulated player, right? And they may be the hotbed for facilitating a lot of criminal activity nowadays, giving the customers online, the criminal also moving their activity online and done virtually more. So this is what I want to add on.
Great, thank you, Maggie. So Francis, you've got some really interesting points raised by both Maggie and Marco. How do you reflect on that? And are you seeing anything different, or did you want to supplement that?
Yes, actually, because of the COVID-19, what happened is the whole economics and the whole business environment has changed. Nowadays, I think it pushed the fast growth in online business to a very advanced level now. Everybody is using online shopping, online. At least, basically, the basic thing is that we will call delivery all the time. Before the COVID-19, that's not really common to most of the people here. And what happened is, because of the COVID-19, and then lots of small business and micro business have been popped up from the market. Just like Maggie said, the people selling masks through the Facebook and other social media. That's very common. And the thing is, we are very focused before is a focus on only the buyer or the consumer can be the victim. But because of this change and of this change, some of the buyer, the supplier and also the seller now can be considered one of the fraudulent victim too, especially because they're doing some businesses very small in value and small in amount, and then sometimes the seller will adopt the payment method like payment after arrival and also cash on delivery. And because of the amount is so small, they sometimes even though they got cheated by the fraudster, they got the goods and not paying the money, they are not willing, or some they feel a bit troublesome to report the case to police. So that's why we can see that the Hong Kong police also built up a very that's not new, but they try to push the ADCC channel to collaborate with the banks like us, virtual bank. So I think it's quite very interesting, because nowadays we are like the bank. From the bank perspective, sometimes we are going to identify the fraud before they report to police. I think it's a quite interesting point raised from this.
Yeah, thank you, Francis. I think that is really interesting, and it shows kind of an evolving role that banks can play outside of sometimes how we think of traditional law enforcement engagement, where it's law enforcement comes to you. So I'm going to shift now so that we really dig into what happens with our risk-based approach and our controls. Everyone, I think, has heard time and again all of the guidance that comes out from FedF and from other regulators that we need to be risk-based, that banks should be conducting risk assessments and their controls should reflect those risks so that resources are allocated in an efficient and effective manner. And that makes quite a lot of sense. But as we all know, that especially on this panel, you can run into real challenges. There are tensions in how you conduct a program in an efficient manner, which sometimes means adopting some time-saving techniques, but still ensuring that it's sufficiently risk-based. Because as you get into higher risk categories, you need to devote more resources. But actually figuring out where that is can be quite challenging. And I think COVID has, as you guys have noted, they're not necessarily seeing new techniques, but we are seeing new challenges. And we are seeing our customers behave differently going online, purchasing from different types of suppliers that are new to the market who may be inexperienced. We also don't know very much about their track record. And then sometimes you've got things moving very quickly as people all of a sudden want tons of PPE that they didn't want before and trying to source that. So in a way, it could be a bit of a case study for how do you take your controls that operate one way in December 2019 and in January, February out here in APAC may need to flex a bit and address some of those challenges. So let's take this a little bit deeper. Maggie, we've seen a lot of the risks, but what are some of the challenges just to like how the AML controls and program were working that COVID teed up? And can you just talk us through a bit of that?
Yeah, I think you mentioned some of the sort of challenge already. For example, the customer behavior definitely changed. The COVID-19, it definitely accelerated those changes. So customer more virtual, they spend more time online doing their banking activities through banks or virtual banks and so on. And also they are changing their spending pattern. As you know, during the lockdown, they spend more money on the grocery, and they do a lot of purchasing on protected gear and often across border payments and so on. So all those behavior definitely create challenge for traditional sort of banks AML control. As you know, most of bank AML control are built based on more physical interactive client or branch activity, right? I mean, even though bank has spent a lot of money digitalization and all those touch points, but it's not yet fully catch up the speed of the customer behavior change. So, for example, the virtual onboarding KYC is definitely a greater demand because if client want to open new account or onboarding join a new bank, they definitely don't want to go to a physical branch, and a lot of the branch hours are being cut off or closed during some of the peak times and waves. And also banks also need to fine tuning their detection scenarios within their screening transaction screening and monitoring to fit into those new spending patterns, and also perhaps have no new business rules to detect those fraudulent activity we mentioned. And also it require a faster, everybody nowadays want to get things done faster, the transaction done faster, the payment faster. But for example, in the space of sanction screening, right, it definitely have a time, you needed to for those screening tool to screen, and also, handle all those alert created by the screen. But now the demand is, I want an instant, the screen have to, I mean, the payment have to go through, the transaction have to go through. And in the event of government release fund or payments, they want to get to the customer hand quickly. So that also, supplementarily pushing our capacity as well as productivity of our screening to monitoring too. And there are, last but not least, there's an increasing amount of fraudulent activity which require more investigation, resource to manage. But as you know, many of the workforce in the bank AML compliance for a longer period of time are working remotely, at home. But that will challenge our IT remote access capability, bandwidth and so on and so forth. And also, how the investigation tools and case management tool can work. So definitely create a lot of challenge for our traditional AML control. But I would say it's not really COVID related, but COVID definitely, accelerated those challenge and the demand for changes.
Yeah, thank you, Maggie. I think we, as my bank, as a traditional bank, has experienced some of those challenges as well. Some of what we saw in the UK is that actually our foot traffic in some of our branches increased because customers were really struggling with how to deal with the government programs and disruptions. And then we needed to help upskill them to do more of their activity online and at the same time protect themselves from the risks of going online for the first time. Marco, when we talk about traditional banks versus more virtual banks, some of what we talk about, the challenges to virtual KYC, et cetera, those are things that are in some sense kind of your BAU, your business as usual. So how does a virtual bank approach that from the customer experience, but also, using your AML controls and your fraud detection controls? What's the balance that you strike there?
Yeah, Jessica, that's a good question. We have at the start, we have the same regulations applied to us as to the other bank, the same rules. So there's no specific set of requirements that is tailored to the virtual bank model. But the model does give you an opportunity, I think, to rethink how you do want to manage your risk. It needs to be fit for purpose still. And in striking the right balance in your controls, I think there are many considerations, but there are two that I think are key. And that is first, you need to think about this, does that specific process make you better at identifying the risk? And secondly, how does that process improve your customer experience? Now also for the virtual banks, I think we're just at the start of our journey. I think there will be things that we learn along the way about how our customers behave and about the risks. So we must remain very vigilant. It's not a status quo, but the controls will continue to evolve as well, I think. Now in striking that balance, you start with the basics. You start with your policies. You need to have the right policies in place. You need to have your right client risk assessment model with sufficient granularity. So to conduct proportional CDD, that's the same as for other banks. But Maggie also touched on another key aspect for the virtual bank, and that's the onboarding process. And the people expect a very smooth onboarding process and straight through where possible. So the closer you get to that 100% straight through, the better that is for the customer experience. So with the data that you initially collect from a client, that should allow you to effectively identify the clients with higher risks. And in that, technology solutions in onboarding can help you to create that experience for the customers. You look at what information you have, for example, the Hong Kong identity card, and then you can partner with identity verification providers or screening, list screening providers to identify the risk. But all that, I think, will put more pressure on the post-onboarding controls to understand the risk. At onboarding, the client told you, this is who I am, this is how I'm going to behave. It's about monitoring that's indeed the case. So you need to flex your risk-based approach on that as well. And Maggie mentioned the transaction monitoring that can take a role there, the fraud programs that you have that you need to be fit for purpose. And also that technology then can help you to make those steps, make real-time use of data to proactively identify the risk. At the same time, there's always a role for the manual reviews. Manual reviews are always a part of your risk-based approach. And for example, training the public on emerging scams, that's not something technology can replace.
Yeah, thank you, Marco. I think that's really interesting to get your view on how these things play out for a virtual bank. And we've heard a lot about, the use of virtual onboarding, and that customers want straight through processing. They want their banking fast. They want it on their phone. They don't want there to be tie-ups. And yet, as we've all noted, and Francis, you talked about, they may not realize that they're actually getting themselves into a fraudulent, situation where they might, their account might be being misused. They might become a victim. How has COVID challenged some of these processes for you as a virtual bank in this year, and put some pressure on either your monitoring or your onboarding?
Yes, thanks, Jessica. I share the same will for Marco and Jessica. Actually, basically, the major challenges come from the KYC solutions and also the transaction monitoring rules. How we tune the rules. I think just back to your question. We focus on the COVID-19 situation. It's a big change of the whole business model and strategy of most of the business. I think what the challenge of to the AML system and control is how we cannot adopt the traditional bank trigger event rules, and also the periodic rules, and also the how we set the transaction monitoring threshold, because we cannot use the same rules should all customer, especially for now is lots of micro business rising from everywhere. Actually, the most of the people, they just take the phone walking around, and then actually they are doing business. So that's why I think that's what we have to be very focused on, is how to set the rules are really in line with the market. So we are working with some of the vendor to see, then some technology people to see how we can really use the AI and robotic stuff to address the problem. And also the other thing is, like Marco say, for the virtual bank, we do not have much historical data. So that's why we have when we think of the AML system, and we have to really think, is that really the setting is sensitive to the actual change. Thank you.
Thank you, Francis. I'm looking at our time, and I want to make sure, and I think Francis actually just teed us up on some of the, leveraging of technology to address some of these challenges. So, and apologies to the panel, I'm going to switch you up a little bit, but their questions I think are coming your way. Maggie, I'm going to go to you first. We've got these challenges. We need to flex our controls, but at the same time, we also have a lot of technology out on the market. How have you flexed your controls, and what role has, if at all, technology played in that development or that flexing process?
Sorry, I was on mute. Yes, I won't say for traditional bank is much of relaxing, but it's a slightly different way of doing things, right? Technology definitely play a big role into our sort of efficiency as well as effectiveness. I think the AI robotic at the before early stage, a lot of them are proof of concept, but because of COVID-19, people are getting more comfortable to actually start using real data to actually start testing. And within an SEB, we adopt a vendor. Many of them know Silent A, which actually start doing a lot of mimic our investigator to look at low-level alert handling. It has been proved very effective, but it's still early stage. As you know, the machine learning need a lot of data, need a lot of sort of a learning curve per se. So it takes time. But the COVID-19 and the whole digitalization, the crowd-based push for all the banks are doing definitely accelerate and definitely let the technology play a greater role. It's not yet replaced, a lot of your human intelligence or investigative work, but it does replace a lot of system. Sort of replace a lot of manual process, utilize more automation. And so it gave us a lot of new interest area for AML practitioner to focus on. Because we now require to learn more about how to talk to the machine, how to, get more comfortable about coding, and also those business, IT talks, right? They're not necessarily speaking the same language, so they are posing a lot of interesting topic, challenge even just for our compliance officer, the staff, and definitely more training is needed. So as a traditional bank, we're adopting the technology faster, and compliance and AML definitely is the first application area, right? They actually looking at, but it's not really we are relaxing our controls. I think in fact it actually try to be more effective and more efficient to meet the regulatory demands and expectations.
Yeah, thank you, Maggie. I think some of what we have seen is an attitude where, oh, technology is really interesting, or that's really interesting working from home. But it all stays kind of up here at this level, right? And then COVID happens and people have to work from home. More customers are online. Doing things some of the traditional way, very manual, just becomes extremely onerous, and it pushes some of the traditional banks to take that technology much more seriously and think about how it works. So in a way, it's been an opportunity to innovate and maybe play a little catch up with some of our virtual banks who just think this is obviously how you ought to be doing things. So I'm going to go now to Francis. You teed up some of the technology that we're using. We see Maggie talking about machine learning, and we've seen you talk about AI. I think we just want to take a little bit of a step back and just kind of explain, what are these different technologies actually doing? How are you deploying them in your controls?
Okay. Okay. The major difference between the virtual bank and traditional bank is we do not have a branch to provide face-to-face service to the customer. I think that's the key point, the key difference between two different model. So that's why most of us are using the eKYC solution and try to enhance the eKYC solution to provide better result to identify the real customer. I think the one thing is quite interesting is how we really can use the biometric data beside the eKYC. So that's the only thing we can help the bank to know the customer more, is that the real person that we are dealing with. I think that's the trend what we are going to. The other thing is I'm absolutely totally agree with Maggie is about the people quality. And then the other interesting point is, beside the compliance officer or the AML professional, I think the CS, the customer service staff, is also have to be boosted up, and then let them to have the basic idea of what is the theory of AML. Because what happened is that they're the only one and only chance to do really have the physical contact with the customer. They make the phone call. So if we can't develop the CS staff to have let them to have a better idea, know what's the AML method, I think that could be a great help to the industry.
Yeah, thank you, Francis. Marco, I want to come to you because a lot of what Maggie and Francis have talked about is the actual technology, how your compliance personnel might be, interfacing with that, some of the challenges that are there, making sure that your IT can talk to your AML people. Sometimes they have different languages and lingo. I will completely admit that financial crime people can have their terms of art that they get very, very wedded to, and find it difficult to communicate outside of those. But we also have another element of this, because when you're talking about virtual KYC, when you're talking about monitoring people's accounts and potentially pausing or stopping account activity on the basis of AML concerns or fraud, that has a customer component. So how for the virtual banks, in using all this technology and how it's operationalized in your controls, is there an interface with the customer? Does that impact the customer experience in some way? How does that side of your control infrastructure work for the customer?
Yeah, Francis just touched on some of the differences in customer experience in the onboarding process. Overall, the customer experience is also different ongoing, because the only way of interaction, or the key way of interaction, is through the application. So, and often what the customer sees is only the front end of a different technology stack. They may not see or feel the changes directly that have been made on the back of that front end that they see. But those technology on the back also help to protect the bank and the client. For example, you can, I think Maggie touched on that earlier, you can create holistic client risk views across functions. You can, it's about your case manager systems. How do you create that holistic client risk view? And now in all that, I think what the virtual banks, they really had an opportunity to think about building that from the ground up, that technology on the back. And it's also a great time, because there's more technology to analyze risk available to us now. So we've really been granted an opportunity there. Now, in that partnering with technology, I think it's also how that can go is you cannot replace or rethink every system or model. And how you start is you start looking at what is a challenge to you, what is a challenge to your clients in the experience, what's a challenge in your risk controls, be it your onboarding, your alert handling, your efficiency in monitoring. And then you start to tackle that one area with different technology providers that are on the market. For example, in AI and machine learning, it can help you in reducing false positives. You want to look at the true risk, but you should not run before you can walk. So you really need to understand that technology before you put it on the back. So that means often those technology providers are used to working in an agile environment. You can, when you're building a bank and when you're building out your processes, you can test, you can see how it turns out after the test. You can test again until you've got it right and until you really understand what you're doing. So I think it's really area by area that you need to look at. And what the customer ultimately sees is the front end and not the back end.
Yeah, thank you, Marco. I think that's a lot of what we sometimes talk about is you can there's a bit of a trap where you see a nice piece of technology. It's very powerful, does very cool stuff, and it can really enhance your controls. It can enhance the customer experience. And then you actually try to implement it into what you do, what your people do. Can they actually use it properly? Will it actually speak to all your systems? I think sometimes Maggie and I might have a bit of envy because virtual banks get to build this, and we have all this legacy systems, and one piece of data is over here and another piece of data is way over there,
Yeah.
and those two systems don't talk to each other. So Maggie,
Yeah, I
do you
mean,
talk about some of those challenges?
yeah, indeed. I think they mentioned it's a great opportunity for virtual bank. It's the data, right? Because we have so many historical data, legacy issue. Data quality is always a headache for all the bank.
Yeah.
But no AI or machine learning will work unless your data is clear, is as accurate, it's clean, and also it's in the format, sort of as content, right? They need it, define a way the new machine and technology can read it. But oftentimes that's not easy to achieve with conventional bank. And second is we have so many systems, right? Back end, front end, upstream, downstream. The connectivity of those systems to your, let's say, screening system, KYC system, or case management system, it's huge effort. It's mountain of effort, right? So when you select a vendor, you cannot naively think they were able to navigate your mountain of system everywhere, because even our
Yeah.
itself internally, we are not able to sometimes sort of foresee what's going to come up, what kind of IT issue going to come up, right? And any changes to those systems, sometimes it's not even possible because it will break the whole thing. So that's something virtual bank doesn't have the baggage, right? They can start from the scratch, fresh, new. They define the data as what they needed for those new technology, AI and robotic learning, right? And
Mm.
and also it's the mentality. A lot of the traditional bank, our staff, from the front office or back end, second line, we all not that ready for new technology, right? We don't understand, or we're in the process of learning technology. So if you do not understand, it's very dangerous to deploy right away. So I think those are the three areas I want to highlight, is where it is our pinpoint for traditional bank, but it's definitely a great opportunity for all the virtual.
Yes. Yeah. Right.
So we've got only 2 minutes left, and I want to just do a sum up and takeaway to get a view from each one of our panelists about the discussion today, the risks that we've seen, or what you might forecast for 2021. So when I ask you to do it rapid fire, very quick, probably 30 to 45 seconds each. And Maggie, I will start with you.
Okay, for me, I think we all not know change is a new normal. So we have to be agile, to be flexible, even as AML compliance officer, and embrace the technology to truly understand the value add, and also use the technology responsibly. I think that's my key takeaway for today.
Mm.
Great, thank you, Maggie. Now, Francis, over to you.
Yes, I think for AML, I think most the change will be we have to flow with the market, and that's no rules can fit all. So we have to be agile, like Maggie say, be flexible and innovative. Thank you.
Thank you, Francis. And Marco, I will end off with your takeaway.
Um, uh, as virtual banks, I think we're just at the start of our journey. So I think we need to be very vigilant to protect our clients in the larger ecosystem. And related to the technology, I think it's important to walk before you run.
Yeah, thank you, Marco. So we're coming to the end of our session. I think it's been a really fascinating discussion. Thank you so much to all our panelists. I think some of the themes that we touched on is that COVID has presented challenges, but also opportunities. It has not necessarily shown new techniques from money launderers or fraudsters. They still kind of rely on the same techniques that we've seen before, but we might see new frequency, new volume, new customers that are at risk that were not previously at risk. And we'll see new challenges to how our controls have operated, particularly for conventional banks, but I think for all banks, because you've got the new businesses, customers acting in new ways, and everybody working from home in ways that they're not used to. But it's also presented opportunities to innovate, to look at technology with fresh eyes, to look at your controls and how they operate with fresh eyes, to think a little bit more like a virtual bank for a conventional bank, but also for a virtual bank to take that next step on their journey of developing their AML controls and serving their customers. So very interesting environment, looks set to continue for 2021. And so I'll wrap up there. Thank you to the panelists, and thank you so much to everybody for taking the time to listen into our discussion. Everyone take care. Thank you.
Thank you.
Thank you.
Thank